Hi, this is Scott Newport with the Mortgage University, sponsored by Midwest Mortgage Capital. Today's Friday Guideline update is about MHDC loans. We hope you enjoy.
MHDC. It's easier than you think. MHDC stands for Missouri Housing Development Commission. Midwest Mortgage Capital is proud to be a certified MHDC lender. Many realtors have been led to believe that MHDC loans are very difficult and could even jeopardize their reputation. We here at Midwest Mortgage Capital are here to prove that that is not true. Midwest Mortgage Capital would never want to jeopardize not only their own reputation, but also the reputation of a referral partner. Midwest Mortgage Capital is not only certified to offer MHDC loans, but we are also very excited to help you close them. MHDC offers two types of products. One, the CAL, the Cash Assistance Loan, and the other is the non-CAL, the non-Cash Assistance Loan. We're going to touch more on the CAL, that is the down payment assistance loan. That is where the MHDC gives 3% to help the buyer get into a home without getting into their own savings account. The non-CAL is a more or less just taking a lower interest rate instead of taking the cash. Why encourage your buyers to do this? Lower monthly payments would be the obvious one, especially if they're using trading in the cash for the lower interest rate. There are no debt-to-income overlays, or in the industry we call it DTI. A lot of the bond programs or municipal programs that help with down payment assistance, such as Beyond Housing, have a pretty small box that their debt-to-incomes will fit into that kicks a lot of buyers out. The best part about MHDC in my mind is that it follows FHA, VA, and conventional lending guidelines. If it qualifies for one of those three products, then it qualifies for MHDC. One extra caveat is that it also can go down to a 600 credit score, whereas the industry standard now is 640 for most of these types of loans. Another great perk of the MHDC product is that there's no need for crippling down payments. A lot of people that are buying a first-time home, or a lot of first-time home buyers, one of the things that they never have a problem usually making the monthly payments. It's coming up with the down payment that is hard, that is most crippling for them. A lot of times they're 25, 26, 27-year-old first-time home buyers, and they haven't had the time to stock up that savings account and have the down payment ready. And if they do have the down payment ready, it's not always a good idea for them to completely deplete their bank accounts in order to get the down payment. Some of the program highlights. Qualified first-time home buyers are eligible to receive a second mortgage of 3% of the loan amount to be used for down payment and closing costs. What's left over, for instance, of an FHA, it takes 3.5%. That 0.5% that is needed for the borrower to come up with on their own can still be a gift or a contribution from another one of those other programs like Beyond Housing. The second mortgage, this is often confused, but the second mortgage is a 5-year diminishing loan at 0% interest. The borrower never makes any payments on this loan. After 5 years, it does go away. The only thing they would have to pay is they would have to treat it as if it was income given to them, so they get taxed on that. Very rarely do they have to pay back the whole entire amount that was borrowed. Another big myth that I think is mainly spread by lenders in the area that don't qualify to service MHDC loans is that MHDC has run out of money. I hear that quite a bit, and a lot of times borrowers are surprised that I tell them no, MHDC never runs out of money. It is continually funded by the state of Missouri. What are the qualifications? We've already touched on this, but I'm going to go into it a little bit more depth. But borrowers must be first-time home buyers. Not necessarily in the sense that it has to be the first home that they've ever bought. It just has to be the first home that they've bought in the last 3 years. There are situations where if someone was married to a person before, wasn't necessarily on the loan, but did take the tax benefits of owning a home within the last 3 years, that would also disqualify them from the program. That's one of the easiest looked over by customers when they think they qualify for this loan. Not always the case. The property cannot be in a flood zone A. That's a 100-year floodplain. This doesn't come up very often, but when it does, there is no wiggle room whatsoever on the product. Household income cannot exceed the limit set by MHDC. This, I think, is pretty fair. A lot of the other products out there, such as Home Path and things like that, have certain limits that are most people that want to qualify for this get kicked out of because they earn too much. For a family of 1 to 2 people, the income limit is $68,300. For a family of 3 or more, it is $78,554, which it's pretty good if you ask me. The sale price cannot exceed the limit set by MHDC. As we speak today, the limit is $243,945. That's a little bit lower than the FHA limit, but still a pretty nice limit as far as what you're going to be able to put buyers into, especially in that first-time home buyer range. When I say the St. Louis area, it is representing the counties of Franklin, Jefferson, Lincoln, St. Charles, St. Louis City, St. Louis County, and Warren. Here are some helpful websites and other helpful links if you want to look into more about MHDC. If you can't get a hold of somebody over at Midwest Mortgage Capital to help you, I encourage you to check these out. I'm Scott Newport with the Mortgage University at Midwest Mortgage Capital. Thank you. And if you have any further questions, please call us at 314-787-2900.